My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. People and my friends, I'm just trying to help you save some money. My job, not just to entertain, but to educate, teach. Call me, 1-800-743-CNBC. Tweet at Jim Cramer. Sometimes it's all about which side of the ball you're on. This morning, the offense was on the field from the moment the bell rang. When the S&P and the NASDAQ were in a foot race to see which could rise faster. But just when it looked like the NASDAQ rally would continue for an 8th straight day, the whole market simply fell apart. Turns out the offense had a false start. Hence this zebra outfit and my yellow flag. And the rest of the day, it was game over with the once mighty Dow leading the down leg again, off 614 points. S&P not far behind, down 1.56%, while the NASDAQ held up slightly better, I guess, declining just 1.24%.
The House of Pain.
What happened? Did the offense jump too soon? Simple. We realized that when a company lays off tons of people, Wall Street no longer considers it a good thing. Before the opening, Microsoft announced it was laying off 10,000 people. At first, the market seemed to rejoice, as it did when Meta fired people at Salesforce after that. But then it seemed to dawn on people that, unlike those two others, we never really expected Microsoft to have a problem. They never fumble. Ball! Sure, a couple weeks ago, CEO Satya Nadella said he would seize tougher times ahead. But who doesn't? So Microsoft stocks goes from up $2 to down more than $4 by the end of the day. Talk about someone jumping. You got to throw, you know what? You got to throw a flag. $5 penalty, repeat first down. The simple fact is that when a company is well run as Microsoft starts laying off people, it is not a good sign. Microsoft's long been viewed as one of the most tremendously stable growers out there. They got a hammerlock in the enterprise and the consumer, along with the most robust cloud infrastructure platform aside from Amazon. Microsoft's supposed to be a lot more consistent than the bloated tech outfits that desperately need to cut costs, all those ridiculous enterprise software companies that came public in the last years. But apparently they had more in common than we thought. Plus, it came at the worst possible time, right when we began to hear from CEOs at Davos calling for a mild recession. Well, I love that, mild. I think it's mild unless you get laid off. That's not so bad. Brian Moynihan said on last Friday's earnings call that his firm's baseline scenario was a mild recession, but he spent much more time emphasizing the positive. But in an interview on CNBC this morning, he sounded much more cautious. Maybe it was just the right thing to say. After all, last night, Scott Kirby, CEO of United Airlines, reported a phenomenal quarter. But he also said a mild recession might be in the forecast. Talk about a buzzkill. You all got hit with a peak-to-trough, almost $5 penalty. I think we could have overlooked these negatives if it hadn't come into a session all bulled up, because we got some weaker economic data this morning, the producer price index, retail sales, showing a nice kind of soft landing in development. That caused the bond market to ignite, sending interest rates dramatically lower, which is normally great news for stocks. On the vast majority of days, a big move down in interest rates would make traders dive headfirst into the stock market. That was also part of the illegal procedure opening. The simple fact, though, is we weren't just dealing with an exodus from tech this time. Almost every single safety stock imploded, too, and they did so while the CEOs of Coca-Cola and PepsiCo were telling our own Sarah Eisen all systems go while they hobnobbed at Davos. Why not? Their businesses are doing great. But when you catch a rotation out of all stocks and into treasuries, as we saw today, a rare rotation, it could absolutely get your head spinning faster than Reagan's in The Exorcist. So what happens now? Well, first, I got to tell you, the bears, they will be out in full force tomorrow. I mean, they'll say we've reached the tipping point, the stopping point, where bad news is no longer good news. Remember that whole mantra about keeping the Fed at bay so that they'll raise rates less aggressively? But at a certain point, bad news is simply bad news. A signal that the economy is getting much worse, and you need to get out of stocks until there's an all clear. We'll also have to endure everyone from the chartists who say we've reached the ceiling, to the VIX folks saying we've grown too complacent, to the strategists who will find it quite easy to say, I told you so. When the 10-year Treasury yield plunges from 3.55% to 3.37% in a day, a truly gigantic move, that's not a sign of strength for stocks, just bonds. I want to call it a legendary flight to safety. You know what's really crazy? We went from looking for a soft landing at 9:30 a.m. to looking for a crash landing at 10:30 a.m. as both the stocks and bonds started trading like we were headed for a nasty recession. Definitely not a mild one. Second, though, and this is the point I'll make at our 12 noon Investing Club meeting tomorrow, and I hope you will attend. Right now, the market's working off one of the most overbought conditions we've had in ages. In the last 2 weeks, we simply rallied too far too fast. It's not that everything's horrible, which is how it looked today. It's just that they're not all as bright and rosy as they looked in the NASDAQ yesterday and the last 6 days before it. I think the truth lies somewhere in between. Consider where the weakness has been. Are you hearing about big layoffs in the banks? No. JP Morgan, Bank of America said terrific things. Wells Fargo has its own set of problems, and it's shrinking some of its footprint, which is a big positive given how poorly run the place was. But let's just recognize that despite Bank of America's Brian Moynihan's newfound caution, those were very, very good numbers. The banks are on fire. As I mentioned, airlines had very good numbers. J.B. Hunt, the nation's fourth largest trucker, had awful numbers, but talked about the end of an inventory correction, and that's a gigantic positive, as you'll hear later in the show. Vast swaths of the economy are holding up just fine. The problem lies in tech, and as I've been telling you for months on end, it's a problem. We have too many enterprise software companies, too many companies that teach you how to code, or how to code lightly, or how to organize and to analyze data, or how to use the cloud, or create new verticals, or break down new verticals, or break down old verticals, on-premise, off-premise, any premise. I think we have a couple of weeks of a, let's call it a period of consolidation. As we get rid of the weak-handed investors, we certainly washed out those who got carried away and committed personal fouls, like buying Bitcoin above 20,000 or fooling around in meme stocks that might not even be stocks much longer. Hey, by the way, I was thrilled to see a piece of brokerage research call out the spectacular movement in Bitcoin as one that occurred in small volume. The analyst didn't use the word sham or manipulation, as has been moved up by charlatans who ply these chimerical wares. Those players need to be thrown out of the game, be carted off the field with fans cheering an invective of alchemy. In the end, what can I say? It's overdone. The Bears tried to sell in the last half hour so they can avoid tomorrow's horrible opening, just like the Bulls were slaughtered today after the beautiful opening. Bottom line, just remember, there was too much joy in the field coming in. There was a lot of unnecessary celebrations, way too much taunting. When the taunters are ushered out and the last of the celebrities are gone, we can return to normal. Fairly good market. But it's going to take a few days. Too many people caught on the wrong side of the ball. Ann in Indiana, Ann.
Hey, Jim. Thanks so much for taking my call.
Of course.
I'm a very happy club member. Thank you.
Oh, thank you. Thank you.
But I feel sort of confused about Constellation. You know, I understand the numbers. I understand what Bill Newland said about, you know, watching now their price increases since they were losing some share and this whole, the class structure change. Yet he's always so positive. He's such a great salesman.
Well, what's happened is that and we own it. You'll hear this tomorrow on the show. I was talking about it with Jeff Marks beforehand. Is that California weather is bad, and a lot of sales are in California for Constellation. That's Modelo and Corona, and it's the weather. And I don't know what to do about the weather, but I intend to own this stock for a long, long time for the trust. And I suggest that we have to weather these storms and buy more if it goes down much more. But thank you for the kind comments. I'll see you at the club meeting tomorrow. How about Damu in California? Damu.
Hey, Jim. I have a question about the company Square. Its ticker symbol is SQ. It's a little down today, but I bought a lot at 180. I bought even more at 130. I bought even more at 80. Did I make a mistake, or should I buy more at where it's at now?
I think you could buy more at 60 and then maybe a little more at 50, as this is a $43 billion company that is not worth $43 billion. I'm sorry to be so tough about it, but you know I do not like tech. Okay, when the last of the celebrities are gone, we can return to normal. It's a fairly good market, but right now, we got a lot of guys who were caught offsides and a lot of guys we just got to throw out of the game. Mad Money tonight. We covered the beneficiaries of COVID recovery, but what sectors are struggling to return to normal? I'm going to give you my take. Then the market has come into the year hot, but which way could earnings season swing the trajectory? I'm going off the charts to find out. And JB Hunt, big trucker, found itself down in the pre-market after its report, but after creeping higher throughout the day. What should you make of the post-earnings action? Let's do it Cramer. I'm taking a close look at the numbers, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.